GKFX Prime presents the week ahead. Hi everyone, I'm Rich, and as always I'm previewing the week ahead in markets. It's a week of central bank meetings, and that's a big deal because central bankers will need to explain the historic amount of printing money that they're doing right now. In this video, I'm going to give you my take on what the Fed meeting could mean for the euro-dollar forex pair. Now, before I run down the top things to watch in the economic calendar this week, can I ask that if you're enjoying this video so far, please click that like button. It helps more people see the video, which means we can keep producing more free content. Two notes for your diary up front. Facebook report Q1 earnings on Wednesday, and Apple reports on Thursday, both after the market close. For economic data, the Bank of Japan kicks off the week of central bank meetings. They will release their Q1 outlook report alongside the interest rate decision. Remember I was talking about negative oil prices 2 weeks ago? Well, it happened last week and it could happen again if inventories data still shows storage is running out. On Wednesday, it's US first quarter GDP data, where we're expecting a big contraction, and then the FOMC rate decision. On Thursday, it's Europe's turn with the first Eurozone Q1 GDP and then the ECB meeting. On Friday, it's the May Day holiday across much of Europe and elsewhere. The first thing I want to talk about is what's been happening in the euro-dollar currency pair. So, at the start of March, there was a huge rally of 600 pips from 1.08 to 1.14. Then it collapsed and fell 700 pips to under 1.07. But since then, every rise and drop in the price has got smaller and smaller. On the chart, it looks like a triangle. It means volatility is contracting. I'm watching this triangle carefully because periods of falling volatility are normally followed by periods of high volatility and big price moves. Now, I can't know for sure if the Fed or ECB or Bank of Japan will cause the next bout of high volatility. Nobody can, but it's certainly possible. So there are two things I'll be watching closest at this week's Fed meeting. A, will they go to negative interest rates? And B, what is the plan for their junk bond purchases? I don't think the Fed will introduce negative interest rates at this meeting. I think they want to avoid ever doing it because it didn't work that well in other countries. But if they did, in my opinion, it would be very dollar negative and euro-dollar pair positive. So in case you missed it, probably the craziest thing the Fed has done in the last month is what really helped stock markets. And that's saying that they will start buying junk bonds. What does that actually mean? Well, the Fed will buy debt from risky companies, which means less risk for other debt and shareholders of those companies. So what I want to find out next is, when will they start buying, and how much, and what will they buy? Maybe the bonds of distressed oil companies. The more aggressive answers to these questions, the more printing of dollars, which is negative force on the dollar and positive for the euro-dollar pair. Less aggressive answers, i.e. less bond buying, should be positive for the dollar and negative for the euro-dollar pair. Well, good luck with trading this week, and make sure to subscribe so you don't miss our next video.